Hey. Unfortunately, due to some technical issues, Brian still cannot join. But anyway, we don't have much time left to wait, so let's begin. We have a great guest today, Darren from QuickSwap. We're very happy to have you here. Darren, please introduce yourself and briefly overview what QuickSwap is.
Cool. Yeah. Yeah, Darren here, core contributor to QuickSwap. Um, I'm on the ecosystem and community side, partnerships, etc. Just sort of making sure that anyone that's on QuickSwap or around QuickSwap or uses QuickSwap is happy. um, Alongside just pretending to be a panda on various social media platforms. So that's fun. But yeah, so QuickSwap obviously started off as just a DEX. Initially, it was a V2 Uniswap fork, just on Polygon. The goal was to sort of just build some Polygon adoption there. Fast forward, I think 6 months, and QuickSwap had more daily transactions than the entire Ethereum chain combined, and was doing like 1.5 billion in daily volume, 1.5 billion liquidity, and then sort of yeah, basically just went from there. So now it's not just a DEX; it does have a V2, V3 DEX. But yeah, the goal is to basically just become a DeFi hub for whatever chains we're on. So we've got like a perpetual exchange on a few different chains at this point. We've just done our governance vote to launch another one on Manta. We have all sorts of integrated sort of DeFi Lego blocks where we've got say V3 liquidity managers. We have like integrated solvers on the front end if you're looking to make trades on QuickSwap. We've got yeah, different kinds of perpetual exchanges. We've got an orderly network perpetual exchange on POS. We've got our sort of own version on ZKVM, and then yeah, just everything else from a gaming hub to just all sorts. So basically, the goal is to just come to QuickSwap and just interact with DeFi.
Yeah, that's really impressive. I was not even familiar to what extent have you uh, have you developed QuickSwap as such a hub for all things crypto, not only DeFi currently. That's impressive. Actually, the reason why we have the space today is we have great news. Fringe has integrated the QuickSwap token as capital and collateral asset on Fringe Finance, which opens a number of possibilities for the holders of the token. So it could be used as a collateral to open loan positions. It the users could lend out quick to earn additional yield. They could amplify the exposure they have to quick token on Fringe Amplify platform, and it could be used in the leverage trading, going long or short. What is your general take on integration and on the role of the lending and margin trading for the holders of Quick Token?
Yeah, all for it. Just lending, borrowing in general. It opens up just a vast sort of plethora of possibilities for sort of token holders and people that are just looking to sort of get some exposure. So yeah, I mean anything from like I think one of our co-founders actually had a bunch of ETH, didn't want to sell his ETH, so I think very early on he landed that ETH out and then used that to buy his Tesla. So he's pretty public about that. So he literally just, I mean, he is a perpetual sort of diamond hander. He just doesn't sell anything. So having an option like this where you can still sort of use your tokens, get access to sort of additional utility through it without actually having to sell your tokens, maybe even some earn some interest, etc. on it, is just opens up sort of a really wide range of options to do with sort of any token, not just the quick token, and just yeah, just keeps things ticking. Um, and then yeah, again, like if people can still sort of access some extra liquidity without having to sell their tokens, etc., that does usually benefit everyone as well.
What an interesting story. Has he shared that in the public space? It
Yeah,
sounds
yeah,
like a
he shared
great
it publicly.
promotion.
Yeah, yeah, yeah. No, he talked about that. Yeah, I mean, but everyone knows he's a diamond hander. Yeah, I mean, he actually he his marketing firm was the one that incubated QuickSwap. And instead of like as a founder getting a token allocation, it was the marketing firm that got sort of his allocation because he's obviously CEO of a marketing firm, and then he had to work for his own marketing firm to earn the quick tokens that he sort of got as a founder, pay taxes on them, and then he's never sold a single token, so he's he's got the short end of the stick there. But yeah, I mean, he's a perpetual diamond hand. Anything he can do not to sell his crypto, he'll do that.
Fantastic story. Can you briefly introduce what is the role of the Quick token in the overall QuickSwap ecosystem?
Yeah, so Quick is the governance and staking token of QuickSwap. So basically, you can use it to stake and then earn a share of protocol revenue. So QuickSwap has like a vast sort of plethora of income streams at this point for token holders. So whenever someone is using maybe the perpetual exchange and then that accrues fees, we use that to buy back and burn some quick, or buy back and give that to stakers, depending on where the governance sort of went for that. Anyone that uses the V2 or V3 decks, they pay a liquidity provider fee, and then a small portion of that fee is used to buy back and distribute quick to people that stake quick. There's a whole we've got a liquidity hub as well, which effectively works as an intent-based solver system, kind of like Uniswap X or 1inch, where you try and make a swap on QuickSwap, and then what happens is our sort of solver system will be like, "Hey, we found you a better trade elsewhere through maybe a market maker or like an additional liquidity source," and then the user gets offered that trade. If there is sort of a profitable trade there, we do share a little bit of that, and then that's used to, I think, 50-50 buy and burn quick, and then buy and distribute to people that stake quick. So basically, and then the other interesting thing is that the quick token as a governance token basically governs the front end and the contracts. So typically most governance tokens will just sort of govern the contract, and then whatever ownership of the front end, say Uniswap style, they can sort of do anything they want to the front end. They added that protocol fee recently, where you make a swap on Uniswap, you pay I think a 0.25% fee. Anything like that would have to go through the QuickSwap community, because we basically like all of us govern the front end and the contract side of things. So yeah, the Quick token holders basically have access to most of the revenue through QuickSwap and the governance over the contracts and the front end.
We do have like a real yield model, and you are governed in the by a DAO, right?
Yeah, yeah. All of the staking rewards are powered by real yield through just interactions with the protocol. It's kind of like it's the exact same thing as Uniswap recently done a proposal to turn their fee switch on. That is effectively what we've already had on for 3+ years, using protocol fees to buy back quick and then distribute that to people that stake quick.
And what do you see as the potential synergies between, the model of DAX and in your case, like more of a broader DeFi hub and the lending protocol?
Yeah, I mean, both of them are absolutely vital parts to a sort of strong ecosystem. Um, they obviously a lot like even things like flash loans, people are just making swaps. Anyone that likes a good old MEV attack, etc. Yeah, flash loans, so even just yield optimization. There's a vast amount of synergies that you have between a lending protocol and a DEX. But yeah, the main thing is just making sure that these sort of building blocks are there for any ecosystem, because users come for these sorts of things. There needs to be these things available for a lot of the chains that we're on. So when we saw Manta, for example, we launched on their Polygon CDK chain pretty early on, and we saw vast amounts of TVL come into that chain and then just plop them into lending markets. I think a lot of them were looking for airdrops. It's a relatively low risk platform to sort of deposit into if you're looking for a new chain that you're farming airdrops on. But yeah, just being able to have these sorts of things available on the chain, especially lending markets, they open up a lot of available capital to people that want to use the dexes. And yeah, again, anything from even liquidations through different protocols. Borrowing against LP tokens is something we're usually pretty bullish on. Just it's like everyone that likes crypto tends to be pretty high on the risk scale for the capital. So yeah, and anything from like multi-asset lending to just tokenizing their collateral. People, degens love to degen. So giving them access to all of these things is usually pretty important.
Awesome. They say like the greater the obstacle, the more the glory in overcoming. And we have a great glory of having Brian joining our space. Brian, welcome.
Glory. Glory, yeah. Thanks, Constantine. You don't say that in private. So thanks for that anyway, my friend.
Do you want to add something to that question of, the synergies between the DEX and lending protocols and the things that Mr. Panda stated?
Yes, Mr. Panda. Yeah, I completely agree with everything you're saying there. And DEXs are absolutely instrumental for our platform, for a lending platform, because we provide very cool use cases to wrap and unwrap some of our composite assets, which include LP tokens and ERC 4626 tokens, and also to repay open lending and margin trading positions by repaying using collateral. So that means swapping some of the collateral for the borrowed assets. And of course, DEXs and smooth integration with DEXs is utterly crucial for us for that. So yeah, there's certainly a full appreciation of the synergy between these platforms, and we couldn't do what we do without good integration with DEXs. So yeah, and certainly through the aggregators, QuickSwap is one of the primary DEXs that we integrate with, or most of the transactions go through on the polychain. So there you go, or the ARB. Yeah.
I do want to add something regarding the extreme cases, the exotic cases. I would say like lending against LP token, taking a loan against LP token.
Yeah. Okay. I'll mention that because we are just in the moment of finalizing our audit for our next release, our version 2.5, and we think within the next several weeks we'll have version 2.5 of Fringe margin trading and lending platform out in market. And one of the key enhancements is support for these composite and exotic assets, which are LP tokens and ERC 4626 tokens. So Panda, you're quite right, degens will degen, but I think more to the point is with support for these instruments and the fact that people participate in the DeFi ecosystem using those instruments, there is a growing need for the ability to undertake more sophisticated financial, or to be able to exercise more sophisticated financial strategies. And our intention with the enhancement that we have in supporting these composite assets is DeFi users can hedge their exposure and tailor their exposure to very specific components of these composite assets. And for example, what is a really good example on LP tokens? For example, there might be one of the assets which is in a pair, in a DEX pair, which is recognized to be highly volatile, and we provide opportunity for those LP token holders to minimize the impact of the volatility of that volatile asset. And even go further, we can provide the ability to hedge impermanent loss. So therefore, the four components of these composite instruments, like in the LP tokens, which are each of the underlying assets and the yield, the trading yield, trading fees that are earned contributing to that pool, and the other exposure that everyone knows about, of course, is the impermanent loss. So those four components, each of those can be hedged, and the holders of these assets can therefore very precisely exercise, fairly sophisticated financial strategies to really tailor their exposure. DAOs, for example, quite often will contribute to a pool to ensure that there's good liquidity and good support for the governance token. But that comes with, it's great for the community and it's great for the token in that it creates some venues for users to trade those tokens. But of course, the DAO becomes exposed to the impermanent loss there, and or just the particular volatility of that token. So these instruments and the facilities that we're delivering allows these projects to, in a more nuanced manner, participate and protect their investments. So we think there is, our market research says that there's great opportunity there. And as this ecosystem continues to mature, these more nuanced use cases become more and more relevant, so that more certainty in financial strategies can be undertaken. And a really good example to keep in mind here is in, say, traditional finance, when organizations take out loans and they fund operations, as much as possible, they look to fix their interest rate so that they've got clear assurance of what their liabilities and obligations are for, at least for the foreseeable future, for the term that they wish to fix the interest rates. And so that as an example where that's a multi-$100 billion market. And that's a really good example where, as the DeFi ecosystem matures, these kinds of use cases and intentions are going to need to be expressed by the individuals and organizations within the space. And the design of our system is to directly facilitate that. So there you go. I probably went on a little bit longer than you imagined, Konstantin, but that's my style sometimes.
Yeah,
you wouldn't get away with being a CEO if you didn't do that. But yeah, exactly to your point. I was speaking to the guy that trains my dog the other day about getting into DeFi. He's just a non-DeFi user, and things like that will get easier. Like, it'll be these sort of complex DeFi strategies will eventually just be sort of one click, he deposits some USDC somewhere, and then someone handles all of that for you. So all of this needs to just sort of be in place so that things like that can actually happen.
Yeah, that's
Yeah,
one
absolutely.
of the things I wanted to ask. Mr. Panda, about the impermanent loss. So that is still a huge issue for the liquidity providers. And what are some innovative ways that Brian mentioned, the way how Fringe platform allows to hedge the impermanent loss for the liquidity providers, and what other, some innovative ways QuickSwap imagine how this could be done?
Yeah, I mean, it's always been an issue with liquidity liquidity providers. I mean, personally, like I'll go into the things we've done just now, and then the things that I see, the way that I see DeFi going. So initially, just now, like when we launched our V3, for example, it was powered by Algebra Finance. At that point, V3 was still really new, and there weren't a lot of sort of DeFi protocols that were built on top of it yet. So whenever a user was sort of making a liquidity position, they were doing it manually. And then just like if we used the audience here, for example, if I just told them to go make a really good strategy for V3 liquidity, a lot of them would get wrecked the minute we wicked up or down 10%, because the risk reward is usually pretty sort of in the middle there, wherein you can get a lot of rewards if you do like quite a tight strategy on a V3 position, but then you're more susceptible to impermanent loss. So initially, we started working with a lot of liquidity managers. The goal there was to basically have people that do this for a living build sort of complex DeFi strategies for the users. So they'd back test the sort of the tokens performance, the charts, etc., and then build advanced strategies to deposit liquidity into, where it's just a case of the user deposits liquidity, they manage that liquidity for them, and then sort of everybody wins. They take a performance fee, and then the goal there is to just basically have their fees compounded in the position, so that it abstracts away a lot of the manual work that they'd have to do. And because these guys are sort of proficient in making the strategies, they're always back testing them, they're upgrading them, the users basically have access to these advanced strategies without a lot of the risk of just creating their own, where they might not be the best for earning fees or sort of protecting themselves against like impermanent loss, etc. But the way I do see DeFi going is, I mean, initially, like maybe 1 or 2 years ago, before maybe the ZKs and stuff popped up, is we look pretty heavily into on-chain order books. I can see those taking off pretty heavily. Like everyone loves the sort of the feel and use of maybe Binance, Coinbase, etc. So things like that will definitely take off when it is possible, and the order matching and stuff is there for dexes. I think we're getting pretty close now. QuickSwap actually has, I think, that on the public facing roadmap. So I hope I'm not leaking too much alpha. But yeah, I definitely see it going that way, where you basically just you put a limit order in. Those are already available on QuickSwap, but yeah, I definitely see more sort of on-chain order books being utilized much more.
Yeah, I've got a couple of points there. That's quite interesting. Just firstly about the AML, the automated, ALM, automated liquidity management. That's really a subset of the greater class of trend that is emerging now in DeFi, which is intense. As in not intense like fully intense man, but intense as in having an intention, where a user can interface with a high-level protocol and define their intent, and then seekers can go and fulfill those intents, and they will become more and more, or they'll enable richer and richer use cases and operations to be undertaken. Now, certainly for automated liquidity management, that's a very specific use case, or a very specific case of intents, and there are some good providers in that space. And some of that I feel will merge into the overall intent space. And Fringe's strategy with regard to that, our philosophy is with intents becoming or looking to become this more than just emerging, but a mainstream aspect of DeFi, where high level and fairly sophisticated intents can be described on intent platforms, and then keepers orchestrate through integrations with base protocols, with core protocols. They will be able to undertake those intents, or at least deliver upon, realize those intents. Now, Fringe's strategy is to provide these core protocol capabilities, but in a sophisticated manner, and which is, just referring back to what I mentioned before, which is the support for some of these composite instruments, so that the intent platforms can integrate with them. And that's really part of the beginning of this journey that we're embarking upon. And I think, Mr. Panda, that another point that you raised in what you were just mentioning was order books. Yeah, you're quite right. There are a couple of challenges with order books which are front running, because to manage your order book, you'll manage your book of orders like as an individual or as a trader. It's necessary to pull off orders from the order book and maybe replace it somewhere. So typically that will be seen by the market as it is not the best use of your order or your capital in being executed in relation to that order. And currently, front running allows other actors to then capitalize upon that and take away your advantage. So there are some by front running you and taking your order where you had intended to remove that order because it was not a most efficient use of your capital, and somebody can arbitrage that opportunity. So some of those challenges still exist in order books on, let's call them open chains, and there are various kind of solutions to that, which is some perp platforms, for example, or at least I know of one, has created their own chain, and it's really only used for execution, or used for execution of the perps on their perp platform, as well as all of the other supporting activities, which is providing liquidity and so forth. And the reason they've undertaken or taken that approach is because that allows them to sequence transactions and therefore overcome the issue of being front run. But of course, it comes with various other issues, which might be greater centralization and so forth. But all of these dynamics are playing out in the DeFi ecosystem, and it looks like in some cases there are users who are happy enough to forego the centralization and therefore censorship-resistant aspects of some financial use cases. But I think that will change over time, of course, as new threats begin to emerge against DeFi. But that's kind of the state of play. And I think, as you say, there's a lot to play out there. And as you say, the order book side of things is emerging.
Yeah, I mean, you actually touched on two actual integrations that QuickSwap already has. So our perpetual exchange on Polygon POS is actually powered by Orderly Network, which I'm pretty sure you were inferring.
There you go.
Yeah.
Yes, I thought I'd give you that opportunity.
And then, we actually already have an intents-based system on the swap side as well. So that's powered by Orbs network. So effectively, when a user goes to make a trade on the front end, Orbs will basically use like intent-based system to basically just look around for a different trade that might be better for them, and then offer them that trade. So using QuickSwap is effectively like using an aggregator as well. I think we are actually plugged in with a couple aggregators. So yeah, there is a chance that if you just use the QuickSwap front end, and even if you're offered like a quote, there's a very good chance. I think 75% of the time, Orbs will basically offer you a different trade through maybe a market maker or some other kind of solver, or maybe through an aggregator. And I think we're also looking at tapping into centralized exchange liquidity in the near future as well. So you'll be able to swap through maybe potentially Binance, but on QuickSwap.
Nice. Yes, nice. Yeah, it's quite interesting. And I dare say there will be continuing synergies between what you guys are doing and what we're doing, and some of it may slightly intersect. But I think the good distinction between the core elements of our platforms mean that there are great opportunities, and maybe I can use that as a segue into just mentioning what Fringe offers quick holders, and why, you know, the partnership between QuickSwap and Fringe and how that arose, and the conversations that we've had that has led to this point and to this call, in fact. So Fringe has listed the Quick token, the V2 token, and that allows Quick users or holders of those tokens to do a number of, let's call them fairly core facilities within the DeFi space. And particularly, it's all about leveraging that capital. So what that means more specifically is using Quick as collateral to open loans and margin trading positions, so that you can maintain your exposure to Quick, but still use that capital rather than just sitting idly waiting for the upside. You can deploy that capital and use it in productive manners to take out, for example, stablecoin loans or borrow ETH, and or amplify exposure to your Quick. So if you hold a bag of Quick and you're looking for it to go to the moon, you can amplify exposure to that on our platform by multiplying the, well, essentially it's your standard looping and borrowing, and then swapping that for Quick, and then using that again to borrow more to then swap for Quick. So at the end of the transaction, this multi-component transaction, the holder has got greater exposure to Quick than they originally have. Also lending out Quick to gain yield on it for any users who wish to borrow Quick for any reason. And that might be for governance reasons, or it might be to look for other margin trading opportunities, because we support quite a number of pairs. I think you guys are familiar with your platform. And above and beyond that, just from the individual benefits for holders of Quick, of course, all of those use cases then extend to any assets, any other assets that those users may hold that we list. And in particular now, with the more exotic assets and multi-component assets that we list, those kinds of use cases can be undertaken, as well as some of the other ones that I've referred to before, such as with regard to ERC 4626 yield-bearing tokens, a user might really like the opportunity, the yield opportunity with those tokens, with those yield-bearing tokens, but they don't necessarily want to be exposed to the underlying because for whatever reason, it might be too volatile, or they just may have information that says they would prefer not to hold or be exposed to that token. So we offer hedging opportunities with those composite index so that, particularly with the ERC 4626, you can gain exposure to the yield, yet hedge your exposure to the underlying. So those kinds of use cases begin to emerge. And as and when ERC 46 tokens continue to grow across the DeFi ecosystem, we think we're quite well positioned now to be able to take advantage of that organic growth. So, yeah, that was just a bit of my two bobs worth there.
Yeah, that's a great introduction to some of the innovative and at the moment quite exotic use cases that Fringe is offering. I wanted to ask Mr. Panda regarding the chain strategy that QuickSwap has, as it seems that currently the protocol is focused mostly on Polygon, where the major part of the liquidity is allocated. What do you think about the upcoming Polygon updates, including the token migration?
Yeah, that's a can of worms. But, yeah. So yeah, QuickSwap. Yeah, I started off on Polygon. We're currently on, I think, 7 chains, including Polygon, Polygon ZKVM, Astar, Manta, Immutable ZKVM, and then Doge Chain. I might have missed one. I might not have. But yeah, the plan is to sort of currently expand through the Polygon ecosystem, grow a foothold there. All of those chains I just mentioned, I think I missed a X layer by OKX, but yeah, I got there. Yeah, basically get a foothold in the Polygon sort of CDK system. So what the Polygon CDK is their chain development kit, and then anyone that uses that will basically get access to the ACK layer. Which, long story short, will just be a sort of conglomerate of chains that act as one chain. So it'll be like a whole bunch of L2 chains. So you could be on Polygon, you could be on Manta, you could have some liquidity across both, and you'll be able to use all of those chains seamlessly. It won't be like the usual typical experience where you have to sort of bridge back to maybe ETH and then bridge that back to whatever chain you actually wanted to go to. You'll just be able to seamlessly use all of these chains. What that'll open up is things like app chains, where QuickSwap could eventually potentially just drop an app chain. You could just deploy liquidity on QuickSwap on one chain, and then anyone from all of those different chains will be able to sort of just access that liquidity. That's a sort of seamless experience that DeFi users and general crypto users need. No one likes to be bridging in and out. And all of that is basically just made available through ZK technology. So basically, with optimistic rollups, you get on like Arbitrum, Optimism, etc. You have a 7-day withdrawal period to come back to mainnet before you can go to a different chain. And obviously, if you wanted to make a swap from QuickSwap on Polygon POS to Manta, that will eventually take like about 10 seconds at the most. If you wanted to do a similar swap the right way through maybe Optimism and then Arbitrum, that'll take you 7 days, which isn't the best user experience. So yeah, basically gaining a foothold in that sort of Polygon CDK ecosystem is massive. It definitely could, once all these chains sort of see the value of the ecosystem and the way the ACK layer work, I think they'll basically just get a lot more adoption. Obviously, massive chains have signed up already. We've got all the ones that I just mentioned. We've got Fox News have made a chain on the Polygon CDK. If you like Fox News, we've got even like Ronin are coming along. Ton have made a Ton application chain. And then basically Polygon's sort of vision and stuff like that is to make one seamless sort of L2 effectively. that just bundles back to Ethereum. So it doesn't matter what chain you're on, you can just play with all of the sort of wider ecosystems. And then two, yeah, their upcoming token transition on September 4th. Hopefully there won't be much to say about that because it should be completely seamless. so if you're on Polygon POS and you've got some Matic tokens, Matic is kind of like ETH on ETH, where it's the native gas token. So the network doesn't actually see it as an ERC20, which basically just means it doesn't see it as an actual token like you'd get like Quick or anything that you can sort of lend and borrow, which is why you need to wrap Matic before you can use it in lending markets or use it in QuickSwap. So what they can basically do, I think, is with a network upgrade, just upgrade anything that is Matic, and then just effectively rename it Pol, which means that anyone that has it on Polygon POS, it should be entirely seamless. I think it was actually LDA that I mentioned earlier that suggested the rebrand from Matic to Pol, like a long time ago. I'm gonna attribute that one to Aztec, which is the CSO at LDA. But yeah, I mean the vision there is just change it to Polygon, and then just enact sort of a wider vision where they have never really wanted to compete against Ethereum. They've always wanted to scale it. They've done that sort of very early on, initially just as a side chain, because they don't sort of roll up to anywhere. The only way that you sort of know anything has happened on Polygon is if someone tries to bridge back to Ethereum, where in the future, whenever you make a swap on Polygon POS, Polygon zkVM, all of those chains, the transaction data from that will get bundled, sent to Ethereum, and improved there. So you've basically got access to really cheap transactions, really quick sort of block finality, and then sort of the full security of Ethereum. You have slightly more security on Polygon zkVM because it's a full zkVM. Polygon POS will be a Validium. So what that basically means is that Polygon zkVM bundles the transaction data and the proof to zkVM, which is the most secure. So I think eventually that chain will be for things like institutions, like really large protocols that have a lot of TVL. And then Polygon POS as a Validium doesn't actually post the transaction data, just to prove that it actually happened, which means that you can fit a lot more transactions into a block, which means the transactions will be much cheaper. So that'll be more suited to things like GameFi or sort of low risk applications. I think I went into the weeds a little bit there, but yeah.
Yeah, we like when people go into the weeds. It's good. There's no problem with that.
Hopefully it sounded like I know what I'm talking about because I just made it all up.
And generally, what is
it?
your strategy regarding the new chains? I see you're quite bullish on the whole Polygon ecosystem.
It's entirely up to the QuickSwap community for new chain deployments, etc. Typically, the sort of core contributors do act as we'll say like shepherds of the community, where we'll like engage with the higher level sort of protocols, try arrange sort of benefits for the QuickSwap community. So things like if we did deploy their liquidity mining rewards for users, or maybe we've actually had a few airdrops for quick holders already. But yeah, it's entirely up to the QuickSwap community. For more context, QuickSwap was a completely fair launch token. 97% of the token supply was allocated to the community. So the only way that has ever entered circulation is through liquidity mining rewards or DAO votes. So yeah, I mean, again, even one of the co-founders didn't actually get like a token allocation. So yeah, the QuickSwap community has basically full control there. The way the token actually got into circulation at the very start and found like a fair market price was you just had to supply liquidity on QuickSwap. You earned Quick tokens, and then users actually supplied liquidity. Like it wasn't like just someone added initial liquidity like you'd expect with like a meme coin or anything like that. Literally, users just added liquidity, and then found a price from there. Completely just user centric.
Brian, what's your take on the whole, ZK rollups versus optimistic rollups and Fringe vision for onboarding new chains?
Eventually, everything will be ZK rather than optimistic, because I think, as Mr. Panda mentioned there are time delays with optimistic transfers, at least in one direction, back to the main chain. And I think that's fairly widely held, that view. And Fringe's strategy with regard to additional chains is opportunistic, where we use a number of heuristics to determine what our next set of chains are. And we're currently working on 2 additional chains at the moment, and that is Base and Solana. And they're different propositions. I mean, one of the criteria is, well, total value locked on the chain, as well as total value in DeFi locked on the chain, as well as competing platforms on the chain. And Base, for example, it's got really good TVL, but there are many protocols already ported to there. So there is an opportunity there to get a piece of a large pie. With Solana, there's different technical issues because it by itself is not EVM compatible. So even though there's layers on top of Solana that facilitate that, there's still the dependency on the various other protocols that we integrate with, and like, if you like, our infrastructure, which is our liquidity aggregators and our Oracle providers on those platforms on Solana. So it's a matter of, the a combination of the opportunity as well as the difficulty from a technical perspective, and also just the feasibility. If there's not sufficient infrastructure that allows us to integrate with the way we need to, well then that all comes into the consideration as to the chains that we roll out to. So Fringe currently is on 5 chains, which is Ethereum, Polygon, Optimism, Arbitrum, and ZK Sync. And we're looking to roll out 2 additional chains soon after our V2.5 rollout, which is imminent. And we'll continue to use those criteria to assess further chains from there.
We're actually running out of the time reserved for the space today. So I want to thanks to our guests for joining today. It's Mr. Panda from QuickSwap and Brian from Fringe. Would you guys have any final words?
Yeah, just Mr. Panda and the community there. Hey, thanks for listening in. This has been really interesting, having this conversation and having the opportunity just to share ideas. And, if there are things that people want to discuss, we've got our Telegram channel. It's fairly wild in there, but it's worthwhile checking out. But particularly our docs, which has some of these exotic use cases that I mentioned. They're described in there, and all about our new V2.5 product offering and our release. So sure, hit me up anytime, and I'll if people have questions, or to our admins, and we'll do our best. And thanks, Mr. Panda. Great to have this chat with you guys.
Yeah, likewise. I mean, all I'll say is just make sure that you like and follow everyone on the panel. Easy peasy.
Excellent.
Thank you so much. Let's wrap it up. Have a great day. Bye-bye.